Okay, folks, there's five stages of a trading bubble. Now, you can argue around some of the definitions, some of the finer points, and there's different ways of looking at this. But just bear with me, and if you take a slightly different view, it's fine. But if you're new to understanding trading bubbles, it's going to be really helpful. So basically, there's five major stages of a bubble. You've got displacement, credit creation, euphoria, financial distress, stroke, the critical stage, and revulsion. And the way it works is displacement is essentially a new technology or a new development that changes the status quo. So, think of Bitcoin, for instance, all of a sudden, remember everyone's talking about blockchain technology. Oh, it's a great way of keeping a list online that's universal and it's incredible new displacement, right? It changes something. You then have credit creation. So people want to get in, okay, and they're excited about this new technology, and there's suddenly new ways of accessing this market. Credit becomes available, and investment builds, and the investment building results in higher valuations of companies involved in the new technology, and then that attracts new investors, and maybe there's some like loose monetary policy at the same time, right? So all of a sudden there's credit creation. All of that helps lift prices. There's this huge euphoria. Along this time, you'd also get something like an authoritative blessing. So something like, a prime minister or a president saying, for instance, Bitcoin is a great alternative to traditional currencies. Or, when we had the one of the South American leaders adopting Bitcoin as its national currency, that kind of euphoria. You then have financial distress, critical stage. That's when you get people that were involved early in this. What they start to do is they start to sell out. So you'll see lots of insider selling. Okay, so even as price is really high, you see lots of insiders selling. People who have, looking at this thinking, hang on, I've made a huge return. It's time for me to book some profit. And then you will often get the financial distress. You might get something criminal. So maybe there's a big fraud that comes to light. There's a huge, we think of Bitcoin, the huge problems there were in Bitcoin regarding the, all the controversy that we've just been through, that kind of thing. And then you get to a revulsion stage, and the revulsion stage is people don't want to touch it. And then you might get the buyer of last resort coming in. So there's different ways of looking at it. You can see, like, if you look at a few different definitions. This is Minsky's. You see a lot of Minsky's reports. So you get this displacement. That's the new technology. Boom, euphoria. That's kind of credit creation, euphoria. Profit taking. That's the financial stage. Critical distress, insider selling, and panic. So it's kind of the same way of really saying that, different thing. Some people look at it like this. Smart money gets involved early. You got the institutional investors. Then you get the mania phase. This is when the public get involved, and then you get the blow off phase. So it's very similar, right? So remember, institutional investors. I remember I was looking around Bitcoin, and when I saw the first Bitcoin article when Bloomberg was saying that Bitcoin can make $100,000, and at the time, like Bitcoin was like $9,000, I think, or maybe $6,000. So it was a huge awareness from institutional investors, right? And then we just had that strong breakout, and then of course it hit the public, and then before you know it, your postman's wanting to charge you Bitcoin, and your neighbors talking to you about Bitcoin. Should they invest? And they're usually asking about should they put their life savings up here. I had lots of calls from friends and friends of friends saying, "Oh, so and so's invested in Bitcoin. They spent a lot of money in Bitcoin." And they were entering up here with leverage, right? And then the horror stories that happen, and then all of a sudden, fear, capitulation, and then you get that revulsion stage, return to the mean. So and here's it's played out. For instance, Bitcoin is a good example of a bubble, and certainly the way it's initially played off. You remember, at one stage, like, is this something important? What's this Bitcoin technology? So you had your early investors who saw something, who were really involved in it. And one of my friends was involved in Bitcoin very early days, when no one was talking about it. And if you did talk about it, you kind of like, you're just like a computer geek, and no one knows what you're talking about. Then there was this, the excitement started to take off. And then more and more people talking about blockchain. It's a new technology. It's going to change the way we do business. A lot of people become very excited. And then, of course, you get the institutional investors around this time started to get very excited. And I remember it was Paul Tudor Jones who suddenly he was publicly saying he was investing in Bitcoin. And I think it was around this kind of time. I thought, oh, hang on, this is it. Because at one stage, Bitcoin was terrorists involved in it, criminals were involved in it. But then all of a sudden, Paul Tudor Jones, serious investors, Bloomberg Intelligence were writing reports on it around this time. I think it was around this time here where I suddenly thought, oh, hang on, this is a bit different now. There's been a shift. That's when the institutional investors got in. And look, it's not a surprise that the institutional investors drove it higher. And when it's pulled back, it's just pulled back to that institutional investor level, really. Then you get all the mania, people, the crazy stories and people investing all their money in Bitcoin, and your neighbors going to sell their house, and they're investing in Bitcoin. They think it's going to reach 1 million by the year 2025, that sort of thing. All those kind of like mania reports, and then of course you have the sell off, the panic, the fear, and then you kind of had the revulsion stage. Slightly different with Bitcoin because it has become like a digital expression, and tracks the Nasdaq very close. So if you just overlay the Nasdaq on top of Bitcoin, you see that there is quite a tight correlation between the Nasdaq and Bitcoin. So it has become like a legitimate financial expression, but nevertheless, it still has all the hallmarks and characteristics of a bubble. So they're the stages for you to look at. Go away and do a bit more research on this. Now, when's this applicable? Like when you start to recognize this. So when you're in this kind of stage, right, it doesn't mean stay away from the market. It just means be aware. And you can take, there can be some fantastic opportunities. My best trade, I think my best trade of the 2020s was a Bitcoin long. And I wasn't a Bitcoin trader. And the Financial Conduct Authority in the UK, just after that time I got involved, they stopped UK citizens buying Bitcoin. Okay, because they could see that bubble coming, and they're like, we don't want our UK citizens to be so exposed to that. Now, of course, people got exposed to all sorts of different ways. I know that, but it's just saying that these kind of bubbles are predictable, and when you see them, you can look for momentum trading opportunities, look for breakouts, look out for moves to the upside. You can keep your stops very tight when you get this kind of enthusiasm for markets. Okay, folks, 5 stages of a trading bubble: displacement, credit creation, euphoria, the critical stage, financial distress, revulsion. Just a very brief recap: displacement, new technology; credit creation, everyone wants to get involved in it, and financial markets are helping you to get involved in it. Euphoria, that's when it gets into the public stage. Front page of Forbes magazine, it's all over Twitter, it's all over TikTok, it's all over LinkedIn, it's everywhere. Even your neighbor's talking to you about it, who has no interest in the financial markets until this certain instrument. Then you get the financial distress, critical stage, record new time highs. You get insider selling. You get people saying, "Okay, that's it." Criminality, examples of fraud. And then you see the big sell-off, panic, fear, capitulation, revulsion. No one talked to me about that again. I hate that instrument. I can't bear it. Then you get the buyer of last resort or in as well. So, when we had the financial crisis, for instance, 2008, 2009, with the credit bubble, right? You all of a sudden get the Federal Reserve, trying to prop things up. You get, governments will be calling in financial institutions. How can we solve this? How can, don't let, in Japan, for instance, when they said, don't let the Nikkei go below a certain price, guys. We've got to stop this turning into all sort of panic. That's the sort of action you get in that time. So I hope that helps folks.